This is Srinivas. Today we are going to learn IFRS 9 financial instruments. What is financial instrument? Financial instrument is any contract that gives rise to financial asset of one entity and financial liability of another entity. Let us take one example here. Mr. Amir Khan has deposited rupees 50,000 in the bank. In the case of Mr. Amir Khan, a deposit of cash is a financial asset, and in the case of bank, it is a financial liability as it needs to pay back rupees 50,000 to Amir Khan. Let us go back to financial instrument definition again. Financial instrument means any contract that gives rise to financial asset and financial liability. There is a contract between Amir Khan and the bank. Amir Khan has deposited 50,000 and bank has to return back 50,000 to Amir Khan. Amir Khan can withdraw this rupees 50,000 in any ATM at any time it wants. It is a present right to the Amir Khan to receive cash, and he can withdraw cash at any time. So it is a financial asset, and for the bank it has an obligation to pay the cash at any time. So it is a financial liability. And financial instrument definition says whatever the contract which gives rise to financial asset and financial liability, then it is a financial instrument. So in this case, whatever there is, cash is a financial instrument, and receivable is a financial instrument, and payable is a financial instrument. Then examples of the financial assets and examples of financial liabilities are: trade receivable is an example of a financial asset, trade payable is financial liability, loan receivable is financial asset, loan payable is financial liability, bond receivable is financial asset, bond payable is a financial liability. What are not financial instruments? Billing is not a financial instrument, intangible asset is not a financial instrument, inventories is not a financial instrument, leased asset is not a financial instrument. Why they are not financial instruments? Because they don't have a present right to receive cash. They receive cash inflows in future. And prepaid expenses, the expenses which we pay in advance, and against that we get whatever the goods or services, and we do not have any present right to receive cash in the case of prepaid expenses. So it is not a financial instrument. Taxes, it is a statutory right to the company to pay the tax, and there is no contract between the government and the company, so it doesn't satisfy the definition of financial instruments. We have gone through what is a financial instrument and what is financial asset and what is financial liability, and examples of financial asset and examples of financial liabilities, and what are not financial instruments. And now we'll go through what is financial assets classification. In most of the companies, financial assets are categorized into two categories: those measured at amortized cost and those measured at fair value. And whatever the fair value changes are presented in P&L, and fair value changes are presented in other comprehensive. This is further subclassified. We'll discuss about this financial assets classification in our next video.